Happy Friday, everybody. Glad you are here. Glad you are here. Boy, was it busy this morning. Probably not going to be so much this afternoon here. And then next week, guys, next week, I expect there to be a very, very busy week. We've got a ton of big tech earnings next week. Okay, we've got Apple and Microsoft and Meta and Google, Alphabet. So we've got that. We also have very, very important eco data. We've got PCE, which is the Fed's preferred inflation indicator, and we've got a jobs report on Friday. The October jobs report is going to be coming out on Friday. And then, oh yeah, what is that all leading up to? That is all leading up to the election. So I expect next week to be very volatile. Now, very volatile doesn't mean seeing a VIX of 30 or anything like that. Very volatile means very active and probably a lot of opportunity. All right. So before we get into what I want to talk about with some more election data, which we've talked about, and hopefully you can all see and hear me okay. And it should look a little crisper because we have a new camera on here today. Before we get into that, let's talk about the market here. The S&Ps, boy, oh boy, we were up at one point about 45 points. 45 points. Now, all-time highs in the S&P, 586.12 in SPY. The high today, 584.46. So we just almost hit those brand new highs and then retreated back a little bit. That was an SPY. I'm going to throw up here SPX here in a moment. Okay, here is SPX, all-time high of 58.78. Our high today, 58.62. Okay, and we retreated a little bit off of that. Okay, maybe a little bit of profit taking here. But boy, oh boy, the markets just seem to be, kind of nonstop here. Interest rates, they've, I don't want to say they've peaked, but they've leveled off, which obviously has taken a little edge off the market here. The eco data this morning was okay. But again, next week is going to be huge here, guys. So get your rest over the weekend and be prepared coming in next Monday, because I would expect it to be extremely, extremely busy. NVIDIA keeps rocking and rolling. In fact, for a brief time today, it became the world's most valuable company, more so than Apple. More so than Apple. Unbelievable here. CrowdStrike, not sure what happened over the last half an hour or so. The stock was up about $5 or so, and it took a quick dip of about $10. And I have not found out any info yet. There was some news out earlier, a couple hours ago, but that didn't affect the stock. So I'm not sure what's going on here with CrowdStrike, but we are definitely going to have to monitor that. All right, everybody. Let's take a look here at some election stuff. Okay? Want everybody to be prepared here. Okay? And we've been talking about this for a while, and there's probably, stat after stat after stat that I could use, but I really wanted to really just kind of pick out what might be the most important. Okay? So, number one, this comes right from the CBOE here. Okay? What has VIX movement done over the last 8 elections? Okay, so in the month leading up, and we're only a week and a half out now, but in the month leading up, we have seen a 15% pop. And then one day, okay, one day and 1 month following, we've seen a 6% decrease. Okay, is that going to hold again here? Maybe. maybe just throwing that out there for the VIX. And I will actually get, let's see, I know the other day when we tried to do this, the VIX website for the VIX futures were actually down. They are up right now. So let's take a look here. Okay, and we can see pretty steady VIX futures here. Okay, here's where we are right now. The November future is almost right in line with where we are right now, and then just a very, very slight drop. Okay, so we'll have to watch that. We'll see if that holds, but that has been historically the pattern. Okay, I see a bunch of you putting me's and whatever in here. Remember, as of yesterday, we're doing a new thing. We're going to have a word of the day, and I haven't put that out yet today. Okay, now, next stat I want to throw out at everybody has to do with the Dow. Okay, and the Dow has accurately projected whether or not the incumbent candidate wins the White House in 22 of the last 24 elections. Okay, this dates back to 1968. Okay, now, do we have an incumbent running this time? I guess, maybe, I'm not really sure. Okay, but the Dow, okay, when the Dow rises in the final 11 weeks leading up to election day, the incumbent party has won 92% of the time. So 11 weeks puts us almost 3 months back. So basically end of July here. So basically right here. So if we were to look at that stat going from here, obviously, to where we are right now, 92% tells us that the incumbent's going to win. I don't know if we have an incumbent or not, though. Okay, so that's just food for thought. That is just, a stat that's out there. Not unlike the Super Bowl indicator. Who knows what the Super Bowl indicator is all about? You guys have probably heard about that before, but who knows what the Super Bowl indicator is? Anybody? Okay. Not you? Okay, not sure. Okay. There is a stat out there, and it's as silly as it may be, it actually has been pretty reliable. Okay, and what the Super Bowl indicator states is that, excuse me, if an original NFL team wins, stocks are likely to rise that year. But if an AFL, or what is now the AFC team, wins, stocks fall for that year. Okay, that has an incredible historical track record to it. But who won the Super Bowl this year? The Chiefs. They're an AFC team. And we've seen big gains this year. So, again, another one of those significant, insignificant indicators that has actually worked, but this year, not so much. Okay, let me put up another chart here for everybody. This is a fun one. Okay, everybody can see this one? This compares unique times of the election. Nope. What do you guys see? I see no's up there, unless that no is to the Super Bowl indicator. So, okay. So, this is basically the last 100 years. Okay? And this shows that Democrats, when they're in the White House, have had more positive years for the market than Republicans have. Okay? Now, that statistic is skewed a little bit. Why? Because Democrats have been in the White House for more years since 1928 than Republicans have. Okay, slightly. It's 48 to 44, but slightly. Okay, so 57% for the Democrats. So positive yearly return 57% of the time. Republicans only 43% of the time. However, what is really more important, okay, what is really more important, and that's why I like the headline to this chart here, is profits matter more than politics. Okay, so what stands out to me even more is that if you look at the right side of the chart here, so this one right here, okay, rather than looking at whether a Dem or a Republican is in the White House, let's look at corporate profits. Okay? So if corporate profits are expanding or contracting is really more significant than who is in the White House. Now, the reason I'm bringing this one up is because obviously you can see here when profits are increasing, stocks are up 2/3 of the time. When profits are declining, they're only up 1/3 of the time. So far, this Q3 earnings cycle, and we're in the middle of it, and this coming week is a big one, like I said, with all of the big tech stocks coming up. Okay, even though over 75% of the S&P stocks that have reported so far have beaten earnings expectations, that earnings growth is less than what it was compared to Q3 last year. Earnings growth this year, I want to say it's around 3.3% for the quarter. Last year is around 4.5%. So we are seeing some negative earnings growth. Again, is this the end all be all to predict who's going to be in the White House or to predict what's going to happen to the markets? No. But I thought it's pretty relevant to throw out there to help us, just give some stats out there. Okay, everybody, word of the day. Word of the day for the wheel spin. There we go. That's what you need to put into our chat if you want to partake in Spin the Wheel at the end of today. Okay, so let's see. Let's start seeing the options in the chat. Let's see you smashing that like button, subscribing. Okay, let's keep going on here with some statistics. While you guys are putting that up there, I'm going to go to the next stats that I have. Consumer sectors. Consumer sectors, okay? They've done better under Republicans than they have under Democrats. Okay, this is what you can see here, the 11 sectors of the S&P 500 and how they have performed basically over the last 50 plus years, since 1970. Consumer sectors best under Republicans. Okay, now, why do you think that is? Think about consumer stocks. Okay, think about consumer stocks. What drives those stocks, and why would the Republicans have a little bit of an edge there, or do best under Republican rule in the White House? Thank you, Sirius. Appreciate that very much. I hope we're getting up there. We need to smash those likes and get the word out. So think about consumer sectors. Well, what happens? What's one of the big differences? Again, this is not a political live stream. I'm just stating the facts here, guys. Okay? What typically happens under Republican White House? We've seen tax cuts, right? Well, when we've seen tax cuts, that boosts consumer spending. It really does. Okay? On the flip side to that, Excuse me. On the flip side to that, technology, energy, healthcare, they do better under a Democratic White House. Okay? This is a little bit generalization here, but it kind of, if you're looking into potential, and there's all this talk now, people getting ready for one side winning or the other side winning, here is some history for you. If people were looking at building a portfolio based on who might be in the White House. Okay? Now, this is not political. I am just stating fact. This is not a political conversation, everybody. The one thing I would say about consumer discretionary, consumer staples, is if Trump wins, okay, which we just said, those typically do better under Republican White House. What do you think? What is one of the major parts of his platform? Tighter immigration policy. That is going to pull back on that sector. Okay, we already have a tight labor market. Okay, we already have some wage inflation. Okay, if we start getting rid of a lot of these people that are in that sector, that could put pressure on profits for the most labor intensive, stocks in there. Okay, so let me show you something here. That leads into this. Some of these consumer and industrial sectors, which are the most labor intensive, and you can see consumer discretionary leads the pack on this one. Okay, consumer discretionary leads the pack on this one. Okay, so we have to take a look at that, and we have to just, everything goes into our decision making a little bit. Yes, you can, Zora. I will actually post a link in here. Okay, at the end, I'll post a link so you can get the charts. Okay, now let's look at another big issue, obviously a huge issue, federal government regulations. Okay, again, this is not an indictment of one side or the other. It is not an opinion about anything. This is just stating fact. Where is the biggest regulation that is out there? Manufacturing, finance, transportation. Typically, there is more regulation when the Democrats are in the White House. Good, bad, or indifferent. Okay, the most recent one that has been in the news that has really affected one of the stocks, in fact, a stock that we have a position in that is going to be one of the most widely watched earning reports this coming week, is Google, Alphabet. Okay, so the thought process here is, if Harris wins, okay, antitrust regulation and some of these enforcement actions probably continue. Okay, probably continue here. Does that make sense? And again, I really want to emphasize here, guys, really want to emphasize that this is not an endorsement of one side or the other. I am just giving you the data. Okay, make sure you get your options in there. Okay, make sure you get your options in there so we can see that. Now, one thing we have talked about repeatedly is, what do the markets like to see? What do the markets like to see when it comes to politics and when it comes to who is in not only the White House, but who is in Congress at all. What do they like to see? Come on. Yeah, split government. You got it. Gridlock, right? Split government really lends itself to gridlock. And as awful as that sounds, that is what the market's like. Why is that? Because when there's a split, whether it's a Democratic White House and a Republican Congress, vice versa, split Congress, whatever it is, less gets done. Less of the what one side really wants to do gets done. Seems counterintuitive to me, but that's the way it works. That's the way it works. Okay, so I would say over the last couple of weeks, there's been an increase of angst and an increase in nervousness about what's going to happen with the election as we've seen these betting odds, right? And we can talk about this next week. I'm happy to. In fact, I have been very, very vocal on this to many of the big names, let's call it, that's out on social media that track the betting markets. Okay, and the betting markets over the last several weeks have really skewed towards one side. You don't see that with the polls. We all know what the polls could mean. They could mean a lot, they could mean absolutely nothing. But the betting markets, which has become a psychological, what's the word I'm looking for? Betting markets have really become like a psychological fix for people, where all of a sudden they see this poly market. For those of you that have not followed along, poly market all of a sudden over the last couple of weeks flipping from 50-50, maybe Harris in the lead a little bit, to Trump dominating, right? Keep in mind, that's exactly what this is. This is a betting market. Has nothing to do with mainstream, with the polls that are out there. And it has been uncovered. This is something I literally talked about. I can show you everything I put out on social media because I put this out there way before this was announced this week. That betting market was skewed because of one person out of France that has bet an incredible amount of money on Trump winning. So let me ask you guys something. Just like when we see volatility change, what causes prices to shift? What causes things to move around? Anyone? Come on, guys. What causes our implied volatility to move all around? Okay, volume's one thing, but what is more important? What is the most basic economic principle that we all know about? Bingo, Steve. Steve, you got it. Supply and demand. Supply and demand. Okay, well, in the case of the betting markets, one massive bettor swayed the entire betting market, overwhelmed the betting market, and thus that big skew is what we're seeing now. And that's why that betting market is so different from what we're seeing come out of the polls right now. Which is right? I don't know which is right. I'm just explaining to you why we are seeing that massive, massive shift in the betting market that we're not really seeing a massive shift in the polls. Does that make sense to everybody? And for everyone, we just posted up in the chat here a link to those charts that I was using today. So if you want to grab that link, go ahead. Also, we're going to be closing out the wheel here in a second. So last chance right now. Last chance if you haven't already put it in here to get your word in the chat. Guillermo, you're very welcome. Okay. As we have been speaking, the market's kind of selling off a little bit. Okay. Well, Scott, I don't know what sports betting site you're talking about. That just could be a bookie here or something here in the U.S. But this Poly Market is a betting site that number one, U.S. residents cannot use. They're banned from it. They're prohibited to bet on there. And number two, you're talking about a $30 to $40 million bet. That's kind of like having a market in an option. And let me pick something out here. Not Cashy, Poly Market, Moton, Poly Market. Let me pick a market here. Okay, that's kind of like if you had this market here and I just randomly chose Tesla. Okay, these 190 calls. Okay, the bid is 77.10. The offer is 77.60. Okay. What if I came in to buy 100 contracts at 77.60? I'd probably get filled. Okay. Now I come in with an order to buy 500 more. They're not going to be at 77.60 anymore. They're probably at 78, 79. Now I come in to buy 500, 1,000 more. That all of a sudden that market is going to be absolutely skewed and is going to shift really, really quickly. Now in Tesla, there's a lot of liquidity, right? There's a lot of volume. There's a lot of liquidity. In these betting markets, there isn't. So the volatility or the rapid moves that you see become even that more prominent because there's not a lot of participation. Does that make sense to everybody? All right, guys. S&P's up 14 points now. They're 30 points off of the highs of the day. Michael, if I can get a link to the wheel here, that would be great so we can get the wheel spin. And then next week, guys, we are, like I said, next week, we've got to be prepared for a very, very active, volatile week. Oh, man, the wheel is closed, and I can absolutely guarantee this is the most I have seen on the wheel here, guys. This is the most I have seen on the wheel. This is awesome. All hands on deck. All hands on deck. That's right. All right, time to get our drum roll sound going. Here we go. Who is on the wheel for today? Is it going to be Mark Connor? Frank Belmont? Mark Connor at the last 2nd. Mark Connor, are you still here? Mark, okay, excellent. Then you are eligible. We just put up the email address. Shoot me an email, please, with your name, mailing address, and size. And we will get you out some swag. All right, everybody. Have an absolute wonderful weekend. Be safe, everybody. Appreciate all of you. Let everybody know about this live stream, please. And I'll just give you a little heads up here. Monday, Tuesday, Wednesday, they'll be at the normal time. Thursday, we're going to do a Halloween special, and we're actually going to do a live stream at the close of the market next Thursday. Okay, but we'll remind everybody of that prior to Halloween. All right, everybody. Thank you. Thank you. Motown, I appreciate that very, very much. I won't let that